Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And today we started off on the front foot above the mark of 25,300, which was a fresh record high for the markets. But from there, we have tapered. And right now, we are very close to that 25,250 mark. So off the highest point of the trading session. On the other hand, the India VIX has seen quite a bit of spike. The last time I checked, the India VIX had seen a spike of almost 5%. So that's what we are watching out right now. While the frontline index is still holding in the green, it's the broader markets which is under pressure today. So both the mid cap and the small cap indices are trading in the red, and the advanced decline ratio is in the favor of declines right now as we speak. In terms of sectoral factors really to watch out for, there was no surprise that came in from the auto pack, and that's why most of the stocks are on the back foot today. Case in point being Tata Motors, so that's really not doing too much. iShares, etc. also are in the reverse gear. FMCG, however, is bouncing back, and ditto can be said for IT as well. Metals and pharma are the ones which are on the back foot, however. Bajaj stocks, they continue to be fairly active, so that entire value unlocking with the date being out of the Bajaj Housing Finance IPO. You have Bajaj Finserv Finance, which are holding up with gains of around 3.5%. Bajaj Holdings have seen quite a bit of spike, and to add to all of that, Incred had upgraded the stock today of Bajaj Finance. So all of this is actually reflecting in the markets right now, Aisha.
Oh yeah, absolutely. And of course, there are names like Gujarat Gas then. Look at the kind of tear that you're seeing in the stock, even though the brokerages at least were not too enthused by this move. The fact that they've decided to merge GSPC, GSPL and GEL with the main company. That's Gujarat Gas. It's been latching on to double-digit gains pretty much from the word go and hasn't deterred a whole lot from there. Of course, there is the Bajaj twins, Bajaj Finance as well as Finserv. They are also up about 3 to 4% apiece. Excuse me. The Ram Bajaj Housing Finance has already filed a DRHP over the weekend with SEBI, and it's a sizable 6,550 crore rupee IPO that we're talking about. Also, some takeaways coming in from the Naukri Job Speak Index, and quite a few interesting anecdotes coming in there. The fact that they are actually seeing the IT sector showing a modest 1% kind of growth. FMCG, they are saying, is maintaining momentum, and it's growing at a good 11% on a year-on-year basis. So that really is the drawdown from the Naukri Job Speak Index. Other than that, continues quiet right now. The headline number, no complaints there. Kunal, are we likely to pick up momentum, or like you said in the morning, that this week is going to be that of consolidation?
Yeah, that of consolidation. But the good sign is that the banking stocks, and we were discussing this in the morning, that banking stocks, especially the private sector banking stocks, are the ones where one should focus on, because that's where I would probably believe that there could be a certain bout of momentum. So I think we are seeing a good slight outperformance from the banking index. But more importantly, I think today, other than the private sector banking names, it's also the PSU banking stocks, which in the last half an hour have seen a good pickup of price action, which means that potentially we could be looking at the banking stocks performing pretty well. I think we still maintain the positive bias for the indices. We were discussing this in the morning, that as an index strategy, I think one should just try and hold on to the long positions, maybe trail the stop losses from 24,750 earlier to now 25,000, 25,050 for the index.
Okay, so that's the view as far as the index is concerned. Naresh, talk to us about what looks interesting at this point of time. You have some of the gas companies which are doing quite well. You have names from the metals packs, etc. That is on the front foot. What is that on your radar right now from a sector point of view?
So from the sector point of view, insurance has continued to be the leader. We've continued to see good momentum across the board. ICICI Lombard continues to make new highs. So insurance is one. Second is FMCG, which is where we are seeing breakouts happen, and some of them are closer to breakout. So ITC is closer to an all-time high. You have Hindustan Unilever closer to an all-time high. And you're seeing some bit of a recovery in the other FMCG names. So as of now, FMCG looks interesting apart from insurance on dips.
I'm scanning through the market, and just one of those days where you would say that you're simply hugging on to the flat line, and that is not a bad outcome. This is one of the, to put things in perspective here, we've seen a 12-day rally, and a 12-day rally where the price change in the month of August for the Nifty is just 1%. So just like you are there in terms of making a new high, and you are essentially not really showing any signs of any powerful momentum. If at all, some of the rank mid-cap stocks have started correcting. And I'll give you one example here. Forget defense and railways, we've said that enough. But look at actually two stocks. One is Vodafone Idea. Kunal, it was at 19 rupees or 20 rupees?
16.5 till last week.
No, but the peak.
Yeah, peak was 19.
So 19, 20 rupees has suddenly now become 15 rupees. It's a 30% correction in a stock like Vodafone. And this is a rank mid-cap stock dominated by traders. Yes Bank, what was the high? Has that also retraced? And can you tell me about Suzlon also, please?
So Yes Bank high was around 32.85.
33 has become 23.
Correct.
Okay, Nifty at an all-time high. I'm just checking the numbers as we speak. And then what about Suzlon?
84 was the high.
And what is it right now?
74, 73.
There is a bull market in these stocks. These are three stocks which are really, what is the retail HNI crowd really active in? Vodafone, Suzlon,
Yes Bank.
Yes Bank, defense, railways, shipyards. And across the board, there is a correction of 15 to 20% which has kicked in. Naresh, come in on this point, please. Vodafone is down, 19 has become 15, Suzlon 84 has become 74, Yes Bank 33 has become 23.
Started seeing the churn over the last months. The index has made new highs, but every sector stock which had gone massively higher in the last 6 months, 1 year, has taken a pause. So it is across defense. Defense actually looks like a case. It could be a multi-month pause or maybe a year also could surprise. Same with railways. Same is the case with the Vodafone Idea, which saw a little bit of a take on Friday because of MSCI. But overall, the structure is there is a rotation happening. If you look at it in the last 1.5 months, the indices which have done well are pharma, IT made a new all-time high, and now FMCG. So the structure of the market has shifted to defensives as of now. That is a takeaway currently.
Good afternoon. Nifty at an all-time high, but a lot of stocks which matter to the viewers, a lot of HNI stocks, a lot of retail stocks, retail-dominated stocks, they've corrected 5, 10, 15, even 30%. Is the bull market over, my friend? Pashupati?
Oh, sorry, I missed it.
You didn't hear my voice, or are you ignoring my voice?
No, I just didn't hear my name. I didn't know I had to be at attention. I think we're looking for cues to move forward, and I think that there don't seem to be any that we can see. So there is a sectoral shift because obviously people like India as a whole, they just want to be in the right things. So you're seeing little nibbles in things like obviously insurance, but you're seeing real estate. The auto pack is a little bit over. People are looking at defensives. People are looking at private sector banks again. So it's like a turn, and they're just moving from one to the other. And as you said, all the good HNI stocks have got kicked in the last 2 weeks. So the HNIs are licking their wounds, and only the index seems to have done super well. So let's see. I mean, we're all here. We're all in the market. We're not going to give up and go away. I think people look at India as a global story. It's fantastic. But, I don't agree with some of the sectors. I mean, I particularly don't like the IT sector, but I think alone because it hit new highs last week. So, but FMCG, I'm very comfortable with. You're seeing nibbles in all the good FMCG stocks, so that's good. So, we can just hang in there, as they say. Nikunj?
I want to go back to this point of reversal in Yes Bank, Suzlon, and even the third one is Vodafone. Kunal, would you read this as a trend? Because these are the typical HNI retail dominated stocks. That's where the sweating has started.
Yeah, it's a trend, and it's a trend that portfolios are not at an all-time high as compared to the indices, which are at an all-time high, and that is also one of the concerns which the markets have been going through over the last 3-4 weeks of this recovery rally for the index, because there has been a very strong sector churn, and I think that's that also indicates that maybe this kind of a rally which you've seen, this last 1,000 odd points rally for the Nifty, it's not been a strong sentimental positive rally for the individual investors. So my sense is that in terms of sector churns and in terms of these individual stocks, they are going through a leg of correction. Now the concern which is actually arising for the likes of Yes Bank and I think Vodafone Idea specifically is that these stocks are now threatening to go below their long-term moving averages, 200 moving averages, something which these stocks have not done over the last 1 year or so. So I think what we are now looking at for is that not just a corrective phase, but more of a steeper correction which could probably come back if in case these stocks correct below their long-term moving averages.
Notice the other pocket which today is really sweating, I think, is pharma. Dr. Reddy, Glenmark, Granules, DVs, stocks which matter today. It's not they're out, but on a day when markets are up, when the trend has been strong, the pharma index, which is a performing index, is down 1%. Naresh.
So they've really done well. So if you look at a Glenmark Pharma, in May the stock was 1,000 rupees. Today we are at 1,700 rupees. So the stock is actually up 70%. Just in August the stock was at 1,400. We are at 1,700. So it's been a stealth rally across the pharma names. We've not even realized the day-to-day moves have been very small. Even a Sun Pharma from say roughly 1,500 in July is closer to 1,800. So it's been a 20% move in some of the larger names. So today it looks like a one-day pause or maybe starting up for a pause consolidation for the next few weeks. But if you look at the whole pharma pack, the rally has been 10 to 30% in a lot of names. It deserves a break as of now.
The word coming in as far as some of the pharma stocks are concerned. Pashupati, I also wanted your take regarding these Bajaj twins. Now with the Bajaj Housing IPO coming to the markets, if you have studied that one, what's the view on that? And what's the view on Bajaj twins?
I haven't studied it to the extent that it should be, but obviously housing finance is going to be an easy low-hanging fruit for the market. And I think that all the housing finance companies are doing well. Bajaj doing it. They've got capital. They definitely want to be in the spread. So in the game, so they definitely want to come in. So that's there. And the minute you get a bump in the price, you already have it's a subsidiary, so they'll get the value. So people do the math and then take a small discount. And since it is a part of Bajaj Finance, so they'll suddenly get a big pickup. And great news for Sanjeev Bajaj and for the rest of the family. And they are the strongest finance company in this country by far. So great news for them.
Indeed. Okay, on that note, we're going to take a very quick break. Still mildly soft for the index. And oil and gas and financials, they're the ones which are leading the charge today. We'll continue tracking markets on the other side of this break.
Only green on the screen, but this green is not really something which is pleasing a lot of market men, because there are a lot of stocks where cracks have actually started opening up. Pharma for one, auto not going anywhere. Things are not looking exactly all that robust again for defense and railways and shipyard and all those defense related stocks. Kunal, I could look at the positive side and say that, okay, with such bad news, auto has not cracked. Auto has been in leadership sector. Tata Motors still in 4-digit. Mahindra & Mahindra, where is it? Mahindra & Mahindra is 2800. iShare holding at 5,000. So is auto exhibiting leadership, or it is time that they would also cave in?
I think it'll be time for these sectors to cave in, because when a sector rotation takes place, it's bound to be that the performing sectors which have been performing very well over the last 3-4 months, 5-6 months, depends on the time horizon we are looking at. I think they are the ones which could be at the brunt of underperformance. Now, underperformance could mean that the stocks may remain sideways. It could mean that many of these stocks which are overbought, they could start to get into a corrective phase. Now, for example, the likes of Tata Motors. Now, the stock had seen an exceptional run, I think, last week or so, when it had moved up, towards, I think, 1100 plus kind of levels. And then in the subsequent next couple of days, you've seen the stock getting back into a retracement. So when a stock, when a sector gets into a moderation, stocks which have moved into excesses, these excesses they trim off, and then you see a price correction or time correction depending on the kind of excesses which are built to the stock price. And I think that's what I would probably believe that one should be looking out for. So which means that traders who are looking at auto sector as an overall space, I think should not be chasing the momentum. Let these stocks come back to their support points, mean reversion, the cool off in terms of indicators, and that's where one could probably look at buying these stocks rather than buying or chipping on momentum.
And which stock do you think is going to get closest to that level? Because two-wheelers haven't seen that kind of cool off as some of the passenger CV makers have.
So yeah, I think Asha Motors is one stock which has been a lot more sideways. That's a stock which on the charts is looking strong in terms of a potential breakout. In terms of the tractor space, etc., I think Ashok Leyland is something which I've been bullish on. That stock at 250 levels, maybe another 10 points on the downside, closer to 240 mark, could probably be an attractive trade.
Okay, the other stock which is buzzing right now is UTI AMC. We do understand from sources that this could be a buyout candidate. In fact, let me take it across to my colleague Anurag Joshi to get more details on this one, because that's the latest that the deal is brewing, that UTI asset shares have jumped almost 4 to 5% on report that Tata AMC might be looking at buying some stake. Anurag, tell us more details.
Top institutional shareholders of UTI Asset Management Company have revived a plan to look at a proposal to offload their equity stake in the mutual fund. Tata Asset Management has emerged as a front runner in the transaction, sources tell us. Last year, Tata Asset Management had looked at UTI mutual fund, but the transaction did not go through because the talks had stalled. Now, if a successful transaction does take place, the value of the transaction for the 45% equity stake that the institutional shareholders of UTI AMC are likely to put on the block will be about 6,700 crores. So that's $800 million. Now, these institutional shareholders are Bank of Baroda, LIC, PNB, and SBI. Punjab National Bank has the biggest shareholding among them, and this followed by Bank of Baroda, PNB, and SBI, who have roughly about 10% equity stake in the company. Now, Tata Asset Management has equity stakes of Tata Sons, which owns 68% in the AMC, while Tata Investment Corporation owns 32% in the asset management company.
Pashupati, what is the best way to your mind to, let's say, participate in financials apart from banks and NBFCs? I mean, is it buy AMCs? Is it buying insurance? Is it buying even companies like CDSL, IEX? What is the best way according to you?
I think you're saying it. Obviously, the ones that are straight in your face can be probably avoided, but you can look at buying a CDSL, you can look at buying an BSE, you can look at buying NSE when it comes to market, you can look at the insurance pack, which is also growth in per capita income means the insurance has to grow, and so it's just like saying, all right, this is what we are guessing that the market is doing well, the economy is doing well, and therefore we're going to get another $2 trillion in the next 2 years. So therefore, what do we participate in? So obviously, it's got to be financials of some kind. I particularly don't like the fintech pack so much, but I prefer, for example, the private sector banks and some public sector banks rather than fintech. But that's my personal opinion.
You don't like fintech?
I don't like fintech.
Why?
Just because I just feel that there's a lot of loans that are being given that without proper KYC, and I think that when the dust settles, there will be some loan losses, and that will eventually hit the banks. But you've got a big window before that happens, so probably 2 to 3 years.
Good time to buy. Is it a good time to buy NBFCs in the near term simply because interest rates are coming down and they borrow wholesale and lend retail, and they would be the biggest beneficiaries of interest rates coming down?
Yes and no, but I don't particularly like NBFCs because I think that they have given out loans, with very little, not proper KYC, like gold loans, things like that. But I would prefer to buy the private sector banks who lend to these NBFCs because they will make exactly the advantage that you've talked about, which is, the mismatch with the short-term rates coming down, they will benefit, and I think that's where the place to be, according to me.
Pashupati, what is it that you are doing in your PA? Has there been any a buy or a sell in the last month or so?
I've been actually sitting on my hands a lot. I'm been in and out of Paytm, some profitably, some not so profitably, but the last time, fortunately, was profit. I am now sort of sitting back because I think now it's in some different zone and it's flying up and down on news. I did shift some IT into some other FMCG, more defensive stocks, because I have done a little bit of that. But the challenge that I'm having is that I've got a lot of stock that's very old, and I now have to look at the 12.5% capital gains and the tax effect, and so I'm trading a lot less than I would like to. It's not like in the old days where I had a trading portfolio and I used to trade a lot. That's just my personal opinion.
You don't like fintech, you're buying Paytm. I think Paytm is fintech.
Well, Paytm is also news. You're getting parts of the business. There's a marketplace that's not fintech. That's got some value. You've got this. They're basically not running the bank, but they're facilitating transactions. So I think it's not quite the It was a fintech till they lost their license. So that's when it started getting attractive again, according to me.
Kunal, Hero MotoCorp, it's been this surprisingly strong stock. Bajaj again strong, and iShares has taken a backseat, right? So is it now like a change of pattern? The classic two-wheelers are coming back?
Yeah, I think it could be possible where I think Eicher Motors could make a comeback, and I think the likes of Hero MotoCorp, etc., they could probably get into a bit of a correction. So I think Bajaj Auto had been a complete strong outperformer from the entire two-wheeler pack. I think that stock managed to break past about the 10,000 mark, 10,600 plus was the recent breakout move for Bajaj Auto, and the stock has moved past about those levels. But then many of these other stocks within the sector, they've probably failed to play a catch up. So I think in this leg of up move, I would probably sense that Eicher Motors is one of the stronger one, which could probably try and make a comeback. The stock has been going through a time-wise consolidation at the 4,800, 4,900 zone for over the last, I think, 6 to 7 months. So potentially, if the stock gets into a breakout, breaks past about the 5,000 mark, 5,050 levels on closing basis, then I would probably believe that it could be good for at least another 250 to 400 points on the upside.
Okay, so that's the view coming in on some of these auto names. Mr. Advani, on that note, we let you go. Thanks so much for making time. But Naresh, what's the top CT trade right now? What's the closing trade idea?
So looking at Max Financial Services, very close to making a fresh breakout into new 52-week highs. And the whole insurance spec has been doing really well. So Max could be the next one which should break out into new all-time highs.
On your radar, Kunal, what are you picking up as a closing trade idea?
That will be by Bank of Baroda, expecting this last half an hour, 1 hour up move for Bank of Baroda to result into a potential short-term uptrend. So would look out for targets in the range of 265 to 270.
Okay, Bank of Baroda it is, which is the top recommendation right now from Kunal. But time now to slip into a very short break. As we do that, hear out what the new chairman at SBI, Mr. Sethi, has to say about the way forward as well as the growth in the system.
I see that our guidance in terms of 14 to 15% credit growth looks like that here to stay for at least a couple of years.
So let me just break it for our viewers. Return ROA, the most magical number for SBI, is now above 1%. NIMs are perhaps best in the industry. Corporate profitability is really growing in the in double digit. So can I say that if not this year, certainly next year, SBI is on course. I'm going to hold my breath when I put that number. Is on course to be the first company or the bank in India, that number, to cross 1 lakh crore.
Without sounding, giving a forward guidance, I can say that this institution has the potential to reach.
But am I thinking right that you headed there?
We are heading there. We are heading there, and obviously the aspiration is to be there, and the aspiration to be the first company to be there. And I strongly believe that this company has got, bank has got the potential to reach.
If you have to reach this mark of 1 lakh crore, you need the economy and the credit cycle in your side, and you need the NPA cycle not on your side. These are two things which have to happen. Economy and credit cycle has to be with you, and NPA cycles have to be away from you. So can I say for 3 years you don't see a NPA cycle coming in corporate also and in unsecured loans also?
I think let's first talk about the corporates. I think corporates by and large are deleveraged, and they're also cautious in terms of borrowing. I think we don't see the kind of borrowings which are not justified. The need-based borrowing is happening, and also what we see that prudence in terms of using their own cash flows, cash accruals before they actually borrow. So balance sheets of the corporates are good, and eventually they have to. We see that a lot of capex plans are being put in place, which means that the credit growth will happen. In case of unsecured loans, I think moderated slightly now. But I I think we all keep saying that there are unsecured loans and there are unsecured loans of SBI. So that part is still there. I think there's a huge potential for qualitative unsecured lending in our books. But you're right. There needs to be at least 3 to 4 years benign asset life cycle, asset cycle for the economy to continue to grow like that.
Back to closing trades right here in 18 hours. Still pretty quiet for the index. 25,341 is where we're currently at. Gujarat Gas now sitting at an almost 11% gain. MFSL, Bajaj Finserv, Bajaj Finance, both those stocks at a 3.5% gain on the futures. And SBI Card as well scaling higher by a solid 3% as we speak right now. On the flip side though, some profit taking in an Hindustan Copper, Idea which is down about a good 4%. Indus Tower as well lower by about 4%. Dixon is down 4.5%. And then Granules which is also lower by about almost 5%. Since we're talking about that, I also want to check in on what the possible FNO inclusions post the SEBI reference paper could be like. So Varun Beverages, Avenue Supermart, these are all stocks which would come off you on your screens, and even Zomato. Most of these weren't like mighty excited or so, but Varun Beverages definitely roughly around the day's high. Avenue Supermart on its way to touch that 5,000 mark. And Zomato is now having a bit of a down day today. From open, it's only dragged lower. 244 thereabouts is where that stock is. Mayuresh Joshi as well on the show with us. Mayuresh, hi, afternoon. What is it that you've been doing in the market? Any interesting buying opportunities or even profit taking perhaps?
Afternoon, Aisha. No, I think we are being a little bit more selective as far as the broader markets are concerned. And therefore, stock additions are being picked very, very carefully. Having said that, Nesco is something that the team is liking at Markets with India. Obviously, I think a lot of emphasis that we lay upon is how earnings are expected to grow, which is reflected through our EPS ratings. And a large part of the expectations in terms of Nesco's earnings should be relatively stable over the next few quarters and over the next couple of years as well. The added optionality, Aisha, that comes through for Nesco, considering their two core businesses, which is the Bombay Exhibition Center and their IT business parks, is the availability of space. So they've just utilized almost 20% for both of these business segments. And as they start utilizing more, and as they explore the opportunities that come through the remainder of the 80% space by whatever means or options that are available to them, I think there is a huge amount of optionality that happens in a land-starved area like Mumbai. The second aspect, obviously, the incubator and the food business has picked up quite meaningfully in terms of the EBIT performance. And therefore, I think the consolidated numbers should be stacked up relatively better over the next few quarters. They've got almost 1,500, 1,600 crores worth of cash onto their books. So they can also grow organically, or in fact, even have a larger amount of dividend payouts if these opportunities do not come by. And therefore, I think EPS ratings, RS rating, the institution holding, the parameters that we see in at Markets with India as far as cancel are concerned are probably getting fulfilled. So Nesco is one interesting idea that we like at this stage.
And looking at the kind of traffic and the amount of interest that people had last week in one of the events, that definitely tells you that there's a lot of appetite for such large events. So Nesco is something on your radar, Mayuresh, but
that was in BSE.
Yeah, but that's what I'm saying. There is an appetite for large events. So Nesco is one of the candidates that
Nesco
can
has some events, is it?
Nesco has the...
I don't know, I'm asking you. That's
yeah, Nesco has the space available to do all of these events. So
in
it's
Bombay.
one of the, it's one of those exhibition centers of sorts.
You live and you learn.
It's at Goregaon? Yeah.
No, been there. So I'm just asking
So
out
it
of
has
curiosity.
a huge ground available wherein you can hold exhibitions like Bharat Maidan, which is there in Delhi. Not of course of that scale, but similar exhibition center in Mumbai. But since we are talking about the markets and what's really doing well, some of the Adani group of companies are doing well. So Adani Power, Adani Green, Adani Wilmar, Adani Transmission are some of the names. And then Jio Financial Services has perked up 7%. Nuresh, any stocks that you would recommend from the Adani pack, and what's the view on Jio Financial Services? Their AGM was there on Friday. They're talking about home loans being given out very soon. Maybe that has got the street excited for now.
Out of the Adani pack, Adani Wilmar looks interesting because it's gone through a sideways consolidation, classical of a bottoming out case. Corrected from 850 all the way down to 350 odd levels. And now for the last 1 year has been sideways. Would have a clearer breakout above 400 odd levels. So for now, it's a risk reward trade with a strict stop loss below 360. Geo Finance, as of now, it's a 1-day move. We've seen a slow drift. Closing about 340 for a couple of days would confirm a short-term reversal is in place, and it could go back to 370 to 400 slowly.
Okay, so that's the view coming in on some of these stocks. But yes, Geo Financial Services definitely doing quite well. Mayuresh, what's your view on power? So a lot of PSUs have come off. Power has managed to stay afloat. But if you look at the latest electricity data which has come out for the consumption of the month of August, it wasn't that great. There was actually a drop of almost 5%. And that's because of the rainfall and the seasonal issues as well. Would you book out your profits out of some of the out of some of the power names, or continue to stay invested?
Manisha, no, I think the high-flying names, specifically the power financing companies as an example, PFC, REC, yes, there is a huge amount of opportunity as far as the financing needs are concerned, because you are expected to see renewables probably expand 3 times from 180 gigawatts to almost 500 gigawatts, which is the set target by the government by 2032. And therefore, I think financing towards renewable projects, whether it's PFC, REC, IREDA, I think these companies are going to stay in focus. They've also got a decent amount of dividend yield supporting them. Asset quality pressures are largely behind them and with the resolutions that have been done. And since they largely lend to government entities, I think the scope of default remains very, very minimal. However, I think the kind of run-up that we've probably seen in these stocks, some element of profit booking or partially booking some profits is not a bad idea. But overall, as a space, Anisha, I think our belief still lies with the fact that structurally, tailwinds still continue to favor power as a sector. And therefore, I think selectively, both generators, transmitters, as well as EPC players should continue to reap the benefit in terms of this structural tailwind. Obviously, how tariffs will play out is going to be extremely critical as renewables increase their share of pie within the overall basket. But I think it's going to be more a story as more capacities come in terms of operating leverage with better volumes being played through with the generators and the transmitters as well. I think this space should remain in focus. So I think power financiers, some element of profit booking is not a bad idea. Some of the generators like a Tata Power or a CESC on declines is not a bad idea to accumulate as well. And you can also look at a few of these EPC players because these EPC players are probably going to benefit not just in terms of the incremental orders that can come through, but also in terms of the O&M contracts that can probably come through.
Right, okay, that's that on some of the power financiers. Look at NCC, NBCC as well. They've backed a couple of orders. NCC, in fact, a sizable quantum of about almost 1,200 odd crore rupees. That's looking smart. That's their August update. And NBCC has bagged a work order worth about almost 183 odd crore rupees. And the stocks have been doing pretty okay since. Mayuresh, how much more opportunity in the entire infra theme you think?
So, Aisha, again, I think we need to be a little bit more selective here. Yes, there are a lot of tailwinds coming through. The government is going with 11 lakh crore capex. Roads, railways, highways, ports are going to come at a humongous pace. We're looking at metros or metro lines coming in key metros as well. And therefore, infrastructure investments are going to be on an accelerated mode. At some point of time, private capex, which has shown signs of green shoot, should also start emerging. But I think one idea that we like at this juncture within this whole space is Pennar Industries. Our take is that the company which has embarked on an expansion plan, they just commissioned the plant a few weeks back. And our own take is the expectations in terms of numbers stacking up, both in terms of volumes picking up for the new plant and expectations in terms of both their Indian businesses as well as their US subsidiary. The Ascent business in the US, Aisha, is just about gaining shape in terms of both orders as well as execution. And therefore, I think as these numbers start stacking up for both the domestic business as well as the US business, along with a very, very strong balance sheet that they possess, my own sense is that earnings should pick up quite meaningfully for a company like Pennar Industries. So I think being very selective here as well, but Pennar is something that we like at this time.
Industries, okay, that's an interesting one. Haven't talked about that one in a long time. We'll keep it on the radar from here on. But on the losing side, Jindal Stainless is coming under pressure. Granules, Indus Towers, Dixon Tech, Mankind Pharma, Vodafone Idea. Some of these names are on the back foot. Kunal, what's the view on Indus Towers as well as Dixon Tech? Both had a lot of tailwinds doing well for themselves. Is there some unwinding of sorts that we should watch out for now?
Yeah, for Dixon Tech, it seems like it's an unwinding because the volumes on Friday was pretty much on the higher side, but the follow-through move on for the stock is on the downside, and the stock is now on the verge of breaking below its 50 DMA. So what we've seen in the last 3-4 days, or rather previous week for Dixon Tech, was a very mild retracement. Today is where you've seen the pace of correction intensifying. That could, I think, probably be one of the key reasons why you may probably expect the stock to get into a further leg of correction. And throughout the day, we've not seen any major fight back into the stock price or any kind of a recovery into the stock, and that's one of the major reasons why it could probably drag a bit more further. Now, in terms of the first level of supports for Dixon Tech, the support which the stock tested in the month of July and the start of August was around the 11,000 mark, 11,200 almost. So I think that's the first leg of support which the stock could retest in this leg of correction. And for Indus Star, it's the first step of correction. The stock has formed a bearish engulfing pattern, but my sense is that potentially over the next 1 or 2 days, in case if the stock corrects a bit more, say comes back to 420, 425 mark, that could actually be a good contra buying territory.
Check in on what the OMCs as well are up to. Remember, over the weekend, IOC had hiked the commercial LPG prices by good 39 rupees per cylinder, and you had OMCs all hold up, HP, BP, IOC, to the tune of about 2 to 4 odd%, at least this morning. Most of them have fizzled out from there. Mayuresh, where within the oil and gas pack are you finding opportunities, if at all?
So very interesting space, Aisha. And again, I think the expectations of upstream companies are actually holding up their fort. Might actually be a base case scenario. Obviously, you've seen Brent crude prices come off, both in terms of what the OPEC output estimates are expected to be and lower demand, specifically from China and the rest of the globe, at least for the first half of this calendar year. Having said that, the expectations, if crude prices stay the way they are, and improvement in terms of demand at a local scale, what we're probably expecting to see is operating leverage getting played out, because as prices stabilize and large part of the volumes start coming through, specifically in the domestic context, you will see some element in terms of stability. One aspect is that the GRMs have come off quite significantly. So I think the refining margins for OMCs are obviously going to be under some sort of pressure as we speak. And OMCs do not have that many optionalities like a Reliance probably has. And therefore, I think refining might come under pressure while marketing might probably hold out OMCs. So there might be some element in terms of volatility of earnings as far as downstream is concerned. Again, petchem, with petchem products and pricing being on the weaker side with weaker deltas as well. I think the petchem side of the business might also remain a little bit subdued. Midstream companies might be on a better track, Aisha, with expectations of transmission volumes holding up and their absolute EBITDA holding up as well. So at this juncture, again, I think upstream like ONGC with the dividend yield, Oil India have really done well. So anybody holding on can definitely hold on. Midstream companies probably can be coming back in focus. So I think you should probably keep that on your watch list. Companies like a GAIL or even a Petronet.
Okay, that's GAIL, Oil India. That's what Mayuresh is liking right now. Kunal, where do you see both gas as well as oil and gas companies, or rather OMCs headed? I mean, HP, BP, IOC the strongest of the lot today. And that breakout on Gujarat Gas today, purely for different reasons, that of merging some of its companies into itself.
Yeah, so I think Gujarat Gas, IGL, and I think MGL, these three names, these stocks have been very iffy in terms of price trends, because there have been periodic breakouts for the stock price, but immediately post the breakout news flow for the stock, you've seen these stocks going to actually a corrective phase. So which means that the trend is not stable for these stocks. And that's why I would probably believe that this kind of a momentum or a sudden surge which you've gotten into the stock for, say, like the likes of Gujarat Gas, I think one should not venture into the stock because of this erratic nature or behavior of the stock price trends. And I think the best strategy over here is to try and wait for these stocks to get back into a corrective phase, say if it happens in the next 1 or 2 weeks, and Gujarat Gas, assumingly if it comes back to say 620, 630 mark, filling the gap which has been created today, that could be a good territory to try and buy the stocks. From the OMC space, I think it's very difficult to pinpoint just one stock which has been very strong, but all three of them, they've shown synchronized up move. The recent breakout which happened for example, for IOC, when the stock managed to cross over levels of 160, 165. BPCL, that stock has looked very attractive the moment the stock had broken past about 335, 350 kind of a major resistance band. And volumes have been very strong on these stocks. So I think what matters over here is that on the way up, when these stocks get into those breakout modes, when volumes are pretty much on the higher side, traders, they tend to like these kind of patterns, and that's where trends originate. So would be bullish on OMCs even from current levels, and I would believe that potentially this space could see another 5 to 7% upside at least over the short term.
Okay, that's the take coming in on oil and gas space. In the meantime, some of the other buzzers in trade. Let's also check in on IT, the big mover from all through last week. Mayuresh, are you seeing any opportunities for a longer term investment in IT, although the index is already at a life high?
No, so I think most aspects are getting priced in, Aisha. So if you speak about expectations of order wins expected to come through on a steady state basis as we head into the second half of the financial year, that is one possibility that the street probably believes should come through as the rate cut cycle begins in the US. The second aspect, obviously, is the key sectors and segments that our outsourcing companies serve. BFSI, retail, manufacturing should show signs of green shoots as well, along with some element of recovery that we are seeing in the European markets as well. So I think the key markets and key sectors should start holding out for IT companies. Now, does that translate into significant orders, specifically for large cap companies and consistent order flows going well into the second half as we speak, and again, the next year as well? I think that remains to be a plausible opportunity that comes through, specifically in areas like cloud computing, AI, and within AI, generative AI, which has become the big, strong buzzword. So I think large IT companies should see some element of progress coming through, but that is getting penciled in. Similarly, for mid-cap IT companies, the order flows have been very, very consistent. A lot of management commentaries have pointed out that order flows will continue coming at a good pace, and therefore I think the constant currency revenue growth should continue at a decent pace as well. Assuming and excluding the kind of wage hikes or salary hikes and outsourcing costs which had shot up, and there will be adjustments in the next 2 quarters for most IT companies. EBIT margins are expected to remain far more stable as we speak. But even within the mid-cap IT, ER&D companies, example, KTIT, so have moved up quite significantly. The latest also being Tata LXI, which has moved significantly in the last couple of weeks. And a few of the other outsourcers within the mid-cap IT space are where they're trading both in terms of late-stage basis as we see, and elevated valuation. So I think it's a hold rating at our end. We continue holding stocks like an emphasis, LTI, Mindtree into our global portfolios. But as a clear disclaimer, we've entered these stocks at far lower levels.
Okay. Naresh, we've been chatting about some of the breakouts in IT all through last week as well. Any trading opportunities now?
So Coforge is one which has given a fresh breakout in the last couple of sessions. That looks interesting. And the stock is very, very close to the previous all-time highs. So that could take lead. HCL Tech remains a favorite on dips going forward. And apart from that, one could look at Infosys on dips because that's another stock which hit a new all-time high. But at current levels, the risk reward would not be great. So on dips, Infosys and HCL Tech, and at current levels, it would be Coforge.
Right. Autos, that's where the focus is. As the monthly sales data is trickling in, you're seeing those stocks react. Although Bajaj Auto seems to be the winner of the lot, and so does Hero MotoCorp. For Bajaj Auto, the two-wheeler sales have seen an uptick of about 18%. The domestic sales have been higher by 40% on a year-on-year basis. And the overall two-wheeler as well as CV volumes have seen an uptick of about 16%. I don't know if we can bring up the scorecard or not, because for Tata Motors, the commercial vehicle has been a bit of a dampener. It's been in line for Maruti. So that's really been the status check so far when it comes to autos. Mayuresh, just wanted to understand what is your own sense. There you go. That's really the scorecard so far when it comes to the sales numbers. But Mayuresh, where is it that you still find value on the table from autos? Because they've had a really great run so far.
Absolutely. No two ways about it, Aisha. And again, two-wheelers have been ruling the roost. And you're absolutely right. I think numbers from Bajaj Auto, TVS Motors, both in terms of volumes and the demand for the new launches have really stuck well in terms of not just volumes playing out nicely for them, but again, I think numbers playing out meaningfully as well. So I think two-wheelers, if somebody is holding, can continue holding. Within the four-wheelers, again, M&M's show was relatively better, and therefore I think our take is anybody holding on a stock like an MMM, Tata Motors, Maruti, they've continued doing well. But one actionable idea within the passenger vehicles might be Maruti on declines. Because our take is that the management is sounding very, very hopeful in terms of new launches, the expectations of regaining market share, the deepening of their after-sales service network. And obviously, I think the premium launches that are happening through their Nexa outlets as well. So more outlets expected, expectations in terms of more product pipelines, maybe more in terms of the EV portfolio, hybrid portfolio in the near future as well. So I think Maruti becomes one actionable idea within the passenger vehicle segment. And at some point, in my opinion, Aisha, I think even the commercial vehicle segment should show signs of recovery. Second half, I think the numbers should start building up for the commercial market as well. And therefore, I think commercial players should be kept on your focus as we head into the second half. But I think opportunities for commercial vehicles will come into the second half. So I think the only actionable idea that we find plausible at this juncture might be Maruti on declines.
Ashesha as well joins in to sum up how the Motown sales have been so far. Ashesha?
I haven't seen any firecrackers this time around as far as auto sales numbers are concerned. First up, let's talk about passenger vehicle segment, which reported a decline for the second consecutive month in the month of August. One, of course, was on account of higher base, and apart from that, car makers are also reducing their inventory, and that also impacted passenger vehicle numbers this time around. So Tata Motors reported a decline of about 3% YOY, Maruti Suzuki down 4%, and M&M meanwhile reported an uptick of about 9% on a year-on-year basis. As far as commercial vehicle sales are concerned, that also were disappointing. So Eicher Motors VECV numbers were flat, Ashok Leyland down 7%, Tata Motors commercial vehicle segment also reported a decline of about 15% on a year-on-year basis. Meanwhile, tractor sales were also on the weaker side. So for instance, M&M tractor sales declined 14% on a month-on-month basis, and Escorts also declined by about 3%. As far as two-wheeler sales are concerned, that was the only saving grace, and it reported strong set of numbers from across the board. Eicher Motors RE was the only one which reported a decline of about 5% on a year-on-year basis. So all in all, it was a weaker set of numbers that came in from automakers this time around. All eyes will be on the upcoming festive season, and car makers are very bullish with respect to revival in demand in the coming quarter.
Right, okay. In fact, let's begin winding up for the day as well. It's been a quiet close at an index level, absolutely flat. And the broader markets a smidge actually favoring the reds. That's how we're closing in for the day. Let's get in more color on how the closing trades have panned out, and I'm going to hand it over to Snehi for that. Before that, Kunal, Naresh, Mayuresh, all of you, thanks as always for joining in. Snehi, take it away.
Okay, well, yes, let's take a look at how the trading session has ended for the day. If you take a look at Nifty, just below, slightly above the lowest point of the trading session, it did manage to scale above the 25,330 mark, but has simmered down from those gains. But, well, yes, fourth consecutive record high and 13th session where Nifty has gained in the green for a row. But if you take a look at Sensex as well, Sensex 0.2% did slightly better than the Nifty, comfortably above 82,500 is where the Sensex seems to be. Broader markets, if you take a look at the broader markets, they underperformed the benchmark indices, because if you take a look at Nifty mid cap down 0.2%, Nifty small cap also somewhere around that mark, down almost 0.4% is where the Nifty small cap index is at. If you take a look at the advanced decline ratio, you have the favor in terms of the declines today compared to the advances. But so that is how the market breadth has looked like today. And if you take a look at some sectoral gainers and losers today, Nifty FMCG has been your top sectoral gainer
held on to smartly by Radico, ITC, Britannia, Varun Beverages, United Spirits. All of these stocks have ended the day in the green. Nifty PSU Bank is your second highest top sectoral gainer. You have Bank of Baroda, Canara Bank, Union Bank, SBI, all of these in the green in today's trade. However, what did not do well today was Nifty Metal and Nifty Pharma. Remember, Nifty Pharma and IT also hit their fresh record highs on those individual indices today. IT managed to hold on to those gains 0.4% higher, but Nifty Pharma did not do well at all today. In fact, the second biggest loser coming in after Nifty Metal today was Nifty Pharma. And let's take a look at that index as well, because you had Torrent Pharma, Zydus Life, Divi's Lab, Aurobindo Pharma, Abbott India that did not do well on that front as well. Now let's take a look at some of the big gainers and losers in today's trade. First of all, we have to talk about Gujarat GSPL as well as Gujarat Gas. Both of those stocks are in focus on the back of brokerages giving a thumbs up to this merger, as well as the news of the merger itself. Gujarat Gas up 11.5%. You have GSPL also up almost 4%. Remember, that was languishing in today's trade initially, but then managed to stage a recovery for itself as well. Also, let's talk about Axis Bank, that is giving some boost to Nifty Bank as well on the back of their fundraising plans, along with the brokerage note coming in, giving Axis Bank also a good cheer on the street. That stock did pretty well, almost 1% higher is where that stock was. Couple of more gainers today. NBCC on the back of the bonus issue that they announced along with the order win coming in. NCC also order win coming in on that front. You had the entire railway pack that was in focus, RITES, RailTel. In fact, let's also shed some light on the Bajaj twins that were in focus today on the back of the Bajaj Housing Finance IPO finally declaring its dates over the weekend. You have Bajaj Finserv up 3.3%. Let's pull up Bajaj Finance as well and see how that stock did for today's trade. Yes, also up 3% is where Bajaj Finance has closed the day. So lots of sectors, lots to talk about. And in fact, last I want to highlight is Jio Financial. That stock also did pretty well on the back of a potential FNO inclusion coming in. 8% higher is where Jio Financial was today. But well, that's how we wrap up with Nifty above 25,270 thereabouts. But that's how we shut shop for the day.